and welcome to Banking Bytes, your daily digest or weekly or even monthly digest on what's happening in banking globally. Before we get into meeting our next guest, I'd like to share that Fred, my co-host and general compadre in these things, has moved on to other things, pastures new. So unfortunately, he won't be co-hosting with me anymore, but I suspect it's likely he will join as a guest in the near future. So, moving on towards guests, I have a gentleman on the line called Cornell Dixon, who is based at Plumery. And what I'd like to do, Cornell, is rather than me introducing you, which is always, a bio, why don't I let you introduce yourself and your background, and then we'll go from there. So, Cornell, over to you.
Awesome. Thanks, Matt. And thanks for having me on. And yeah, I guess where to start? I'll give you the short story, not the long story. So in short, born in Romania, emigrated to the UK when I was quite young, grew up there, so formative years, and then actually had a legal background, so read law, and eventually got to the decision moment 6 years in that it wasn't my passion and where I wanted to go, and then pivoted basically into fintech once I was finishing up my master's in Amsterdam. And since then, so that was 15 years ago, I've basically been in fintech my entire career.
Let's move on to disruptive technologies.
Yep.
So it gets thrown around a lot. It's a bit of a buzz phrase at the moment. But at its core, it's fundamental about how do we change things. So from your perspective and purpose, what does disruption in digital banking mean today, and where do you see it most visibly playing out?
I mean, there are so many vectors of change at the moment. I think it's difficult to pinpoint exactly one. I mean, obviously, everybody will probably be screaming at their phone or their computer, AI, it must be AI, but that's simply one element. And the change that and the disruption that something like that brings is fundamental to almost everything. It's service provisioning. It's the type of model that financial services companies can expect. It's the risk that they're willing to accept from working with systems. It's the pricing that they're willing to accept. I think that if I take a step back away from, specifically AI, or, we see stable coins also as a really big one. I think there's generally big disruption coming from the fact that these ecosystems are not fundamentally walled gardens.
Yeah.
So what we saw with open banking, I think, was a first pass into the breaking apart of this walled garden ecosystem that many financial services providers operate in today, but also the technology companies that support them. So I think the fundamental change for me and the big disruption that's coming is the opening up of the ecosystems and the expectation that they collaborate. Because if you look at AI, you need to feed it data and it needs to extrapolate that information, ideally in an ethical and risk compliant way, obviously. But still, it needs data. It needs to infer patterns. And if you just use your data and if you just use your own systems, it will, by its very nature, be limited. At the same time, if we think of payments, for example, that's already something that's being broken apart, and there's a certain expectation from clients that it's open. And I think service providers like Plumery and like others are starting to recognize that change is happening. And we saw that change, at least more recently and more fundamentally, happen over the last decade in e-commerce. Where again, it used to be quite walled gardens when it came to how you build a website, how you deploy, how you manage your inventory and all that kind of stuff. And now that's completely opened up way more than it did in the past. And guess what? It's more efficient. I think costs are good. Companies are able to better price. So there's a whole lot of benefits that come up, but there's a certain disruption that will happen, especially when it comes to change management and risk appetite. Especially working in a regulated environment. If you're selling shoes on Amazon or on eBay or something, it's a very different business model than handling people's money. So I think that's yeah, that's going to be, I think, where the focus will be in the next 5 years or so.
Okay, interesting. So I'm going to read this from my notes, which is why I'm looking behind the screen, because I have multiple
No
notes
worries.
going on. As I get older, I'm finding retention is not as strong as it used to be. So reading this, so Plumery itself, so as I say, reading the terms here, takes a modern cloud-native approach to the digital banking experience. So that being the case, we've not even edged on it. We've talked about AI already, which comes up in every subject. But what are the what are the key technologies or design philosophies that are going to drive the disruption in your view?
So obviously, I have a small bias when it comes to how we've set up operations at Plumery and where we see the benefit. But
absolutely,
even going outside of the company, it's a shift that we're seeing across a lot of the industry.
Mm-hmm.
So one is, like I mentioned, openness, right? So the expectation that whether it's our system or whether it's any other, they need to be interoperable. So the days of having, these really old monolithic mainframe based specs, they might still exist for certain organizations, but I expect that will change very quickly. And we're seeing, hollowing out the core or going coreless or, going multi-core, right? There's all these ways of managing that risk, but it's not just on the core. It's also on, how do we integrate value-added services from a third party easily into our banking apps or into our financial services apps? And that's fundamental to the speed that we're seeing with the likes of Revolut, right? They're able to very quickly integrate value-added services that their clients want at speed and at scale.
Yeah.
So, so that openness is one. I think obviously cloud is just it's the way that it's going to go. Many companies are still in that transition, and I know it sounds a little bit trite, like we were talking about cloud 10 years back, but still the amount of organizations that we still see that are on premises, whether for regulatory reasons or just for risk, that will start, I think, fundamentally being act as a disruptor, and then there's a more I would say almost like a TikTok that happens, right? So you see the industries moving, one way and then quickly pivoting and going the opposite. So, we saw over the last decade that, because the skill set maybe wasn't there within the financial services organizations, they pivoted quite hard towards, working with big platforms and big systems that, provided everything that they needed. So whether that was for, the channels, whether that was for workflow or processes or whatever it might be. Whereas now we recognize that a lot of that stuff's been commoditized, and like actually banks and financial services providers kind of want to go the other way, where they can work with their own teams or with their trusted partners and actually control their own destiny. And especially if you have a more open ecosystem that is way more scalable and interoperable, then it also makes sense that you don't want to lock yourself in necessarily to the ways of working specifically of a platform or of a technology. So I think that's a huge fundamental shift in both market expectations, but then also in terms of the expectations that technology providers like us can and should have in terms of our operating model, our cost structure, and how we go to market, basically.
So, and interestingly, to drill into that a bit more, because as you said, I work in this world as well and do a lot of consultancy with the big and small banks and FIs. And I still see, you mentioned like cloud has been going on for a 10-year conversation, and some are further advanced, some less so. I think all are now saying for the public consumption, we are cloud native, but actually once you scratch beneath the surface, not so much. But how are you finding it culturally? Because that was always the thing I found is we can go in and talk about the future and this is the tech to solve that problem or these issues and the customer journey, etc. But often it would still come down to a cultural issue in that not being a digital first culture, traditionally, a lot of the decision makers still have the on-prem software based viewpoint. And to be fair, it's quite hard to transition from that because we all see it as if you just do this, you'll unlock all this business and your customers are really happy. from their perspective, but if I get this wrong, it's a leap of faith, right? If I get this wrong, customers miss out, shareholders miss out, I probably lose my job. So it's a very long question into how you find the cultural element of this, because the tech side is almost an easy sell in some ways.
It's always been a challenge. To be fair, though, and to my peers in the industry, business and IT, the people that just want to get done, basically, they get it. Whether they just want to see the results. But on the other hand, I also respect the fact that they are managing people's money, they are handling people's money, they are the custodians of people's money. That means, there's certain controls and parameters that should be in place, because we've seen what happens in the really deregulated or less regulated world, crypto and the like, where things can go wrong very quickly. There's a rug pull. There's a depegging. There's a depegging from the USD, and all of a sudden things tank. People lose their money. So it's not exactly the same, but I appreciate that those controls are there. I think the change makers that I've seen over the last few years, both at Plumery as well as when I was at Adyen and at Backbase, the change makers in the financial services side are the ones that are kind of going almost like a disagree and commit point of view, from AWS, where
Absolutely.
Look, as long as these guardrails are in place, we don't fundamentally agree with the direction, but we need to have the right kind of controls or exit procedures or whatever it might be to make sure that we manage that risk should it happen. But do it in a controlled fashion, do it small, test it out, make sure it works. And then if it does work, then scale it up.
Yeah.
That's the approach that we're seeing being taken more and more, because, fundamentally, organizations that continue to have risk and control procedures that are predicated on that on-prem, fully controlled, fully locked down world, they're going to get left behind by those organizations that do update on a regular basis their risk appetite and their control procedures to the new world, basically, into the new ways of working. And that's work in progress. I think to say that it's done or that it's not done, it's work in progress. And I wouldn't even say it's country by country or region by region or continent by continent. It's really specific to the individual organization and to the people.
Yeah.
That's the thing. And I get it, right? Like, if I've never done something before, right? I've never gone bungee jumping. It might be the safest thing, right? There might be all these risks and risk procedures and control mechanisms to make sure nothing happens, but still taking that leap of faith is challenging for a lot of people.
It is. And I think where we've seen, it's always easy to be super excited post-event, but the Revoluts of the world, and we'll see that's the poster child now, especially once the valuations get thrown in. But at the time, kind of ridiculed, mocked. This isn't how it's done, and now actually, still
ridiculed. I still talk to so many executives over the last few years who go, "Oh, they're not real. It's only where people put their pocket money." And I'm going, I have friends who have their entire life savings in with maybe that's not the right thing for them to do, sure, but from a trust perspective, like, that's not the case.
Exactly. And I feel as well that you'll see that the next generations that are coming through, to them, they're established. To us, they've been around for a while. They're kind of still classified as the new kids on the block. But if you're 11 onwards and you start banking, that's just another brand that you're aware of that's a bank. There is no baggage or history behind it for you, and they meet your needs. So I think they've helped and hindered in some ways, and the people are like, well, how do we compete? How do we keep up? Which is where the cultural question came in, because often it's not a tech conversation. Tech is kind of the delivery mechanism, but if you've not got the tech. So that kind of leads into then talking about disruptancy stuff. So Plumery is backed by a VC, as I recall.
Yep, it did.
And evolved from consultancy routes into being a product. I
Yep.
think that's correct. So
Yep, indeed.
that that's a pretty disruptive journey in itself, in reality. So what were the biggest pivots? Like coming back to that word we used at the beginning, the pivots in that evolution.
Well, I think we always had the intention to make sure that we built the best product, or at least the product, the best product that we envisioned. And ultimately that comes from a lot of the lessons learned that our founder Ben and also all the leadership have had from their professional careers. Most of us have worked in financial services and fintech, so you'll find that we've worked in banks, so we've been on the other side where we've had to go through these, change management, change control, and risk procedures. So we have that understanding. And at the same time, we've also worked at digital banking platform companies as well as core banking companies. So Ben, for example, he's been everywhere in banking, large multi-jurisdictional banks where he was chief architect, to working at Backbase, working at Mambu, and obviously now working at Plumery and founding the company. And there we wanted to take the lessons learned of how to really build a rock solid SaaS like, because running full SaaS might not be the right fit for all markets, for all customers, but how do we take those principles and put them into a platform that's cost efficient, scalable, and abides by these principles of what we were talking earlier about, an open ecosystem, being interoperable, and not presenting the lock-in that we see with many of the options that are out there today. So that was a relatively easy, if you can call it a pivot. And I think, like any company, we will probably end up in a position of having, really, these are really our core strengths, for this particular core market. And that's okay. But I think we always need to continue tweaking and innovating on the model, because ultimately that's the road to stagnation. If we say, this is exactly the model for exactly the market, and we don't change over time, we never know what's going to come over that hill. I mean, again, a few years ago, how many companies had an AI strategy? Back in 2020, 2021, if you talk to people about AI strategy, they go, oh, maybe chatbot this, help with some self-service, who knows?
Or in truth,
what's happened.
Got a chatbot. We've got a chatbot. We're already doing it. We already service people.
Yeah, exactly.
In the
we've got a chatbot. I mean, AI has been around there for a long time, right? In terms of AML companies have been using it for a long time, right? To help detect fraud. It's been there for a long time, but this next stage, who saw that coming? So we always need to be able and to be ready to pivot to those kinds of disruptions in the market to bring the best value to our clients. Because ultimately, if we're not able to make those changes on behalf of our customers and innovate, that's why they trust us. Because we provide the subscription to innovation, basically. Then we're not doing our job. Simply put.
That makes sense. That makes complete sense. I mean, so we leverage AI. Everyone has to leverage AI. I know that's kind of a cliche. We work with OpenAI. We're one of the 7 global partners. And again, what we've found is, I would suggest we've taken the more mature approach, is that it's not been, this is, the new shiny thing. It's the greatest thing ever for everything, anywhere. It will apply to anything. It's more playing with it is perhaps too glib a phrase. Working with certain parameters to find out where it fits best. What are the best use cases that drive real value? And that's part of that partnership piece. It really, you're alluding to with your customers, you're being a trusted partner to say, we've played with this for you. These are the use cases that we feel add value currently, and we'll continue to do so. And that's why, you work with us. And then we can apply those to them. You can look at code reviews or reading, old legacy tech, legacy code and documenting it, etc. But our teams are finding value in using it. And sometimes some people are using it just, you've been on holiday for 2 weeks, you've got 2,000 emails, and getting a GPT to read through emails and prioritize them for you.
Sure.
Even that, it's instead of half a day's worth of emails, it's half an hour.
Exactly.
But yeah, I digress onto the AI. This isn't an AI podcast. But yeah, it's fantastic, but it has to, like all things, it has to be leveraged in the right way.
And look, I think it's a really great thing to get excited about. But still fundamentally, when I speak with customers and when I speak with banks across the world, like there's still a few fundamental truths that AI doesn't even factor into.
Yeah.
The fact that we're providing a technology platform ultimately at the end of the day, and if a customer is not cloud first, they've never been in the cloud before. If they're not interoperable with outside and external systems, never mind internal systems, if their teams aren't geared up to quickly innovate and deliver in days, weeks versus months or quarters, then why are we even talking about AI? So I think it's a great thing to get excited about, but I think that those fundamental foundations and building blocks, they need to be in place, because great, we can have the best, most shiny iteration of AI happening over, which is great, but I see banks. I've been in discussions with banks who want to have that conversation, and that's really good, but their core banking goes down once a month, and their customers can't access their money. So, fundamentally, I think that's a more important risk and challenge to address than implementing the latest LLM model into how they work.
That makes sense. Actually leads pretty well into kind of the next conversation or question. So, it's safe to say that not all digital transformations are created equal. So how do you at Plumery define success when helping a bank modernise? I know it's a very broad question, but
it's a bit of a challenge, because it depends. It really depends. I think there's I would basically look at it. We serve a few types of clients. So I think on the more sort of classic bank, a larger financial services provider does a little bit of everything. They have retail customers, business customers, card products, etc., lending, savings. I think there it's about. I would envision success for them as they are able to, independently of us, they don't need to pick up the phone to make changes. I think we want to make sure that those kinds of clients have the keys to success and to innovation. But basically, if you think of it almost like we provide the foundations to the house. We have the plumbing, we provide the electricity, but they can break down. Maybe there's a few structural walls that they shouldn't knock over, but fundamentally remodel the place. Add your own theme, add your own color, add your own furniture.
You want open plan living, have a kitchen,
go for it,
diner, family room.
Go for it. So we want to make sure that they have that kind of freedom as a business to basically make sure that they can bring the punters in and that they keep coming back. And we're not going to be the ones that say, this is the way you should do it in your country. This is the way this is what good looks like. We can give them the inspiration, but we know that good looks like it needs to be secure, it needs to be stable, it needs to be scalable, it needs to be open. So we make sure those fundamentals are there. But then how it's specifically implemented, we see back to that, TikTok from more dependency on the vendor to more freedom. We want to give them that freedom. We also work with neobanks, and there it's a completely different. There it's not completely different, but it's a different vision of success. I think there it's not so much about giving them the freedom; it's about making sure that they have a stable, cost-efficient, and scalable platform, which is the most important thing from the beginning. And they can just basically focus on their core business value, which is finding the right products to build for their customers and then being able to launch it for those customers in a quick manner. So again, having to wait 6 months and investing, 20 million into the software provider, that's not something most neobanks can do from the beginning unless they're extremely well funded. So what we would be looking at is, more like, how do we get you live in 2 months?
Yeah.
With the bare bones, with the basics, and then from there you can iterate and go to market, while actually being able to make money and get customers in.
Absolutely.
From it. That's success for them. So it depends a little bit on the customers that we're serving.
Do you find a difference then? Because that's really interesting, obviously, between, we'll say, more traditional bank players and the fintech side, or neo banks. What about regional variances then? Because obviously you still have a neobank and a traditional bank in region, and then different cultural variances, as in genuine regional cultural variances. So where do you find the differences there in how it's received or adopted? Is there a difference?
Maybe there it goes. Maybe more back to people. I would say, right. So I think it's more on the type of institution and what their risk appetite ultimately is for the type of change and the type of transformation that they want to achieve. Mm-hmm. Because I've worked in the past with large multi-jurisdictional groups, and it could be that at headquarters, head office, they're very willing for change to happen. Let's go.
Yeah.
And then actually on the local side, the risk tolerance might be significantly higher, and they actually don't want to rock the boat at all. So
yeah,
it really depends. I've seen all shapes and sizes. I think the biggest factor that at least we see is we need to have the flexibility to adapt, mm-hmm. and to make sure that if those adaptations are put in place, that they can be done with minimal cost and with minimal effort. So, sure. If you have to launch, so think of, you're launching an app in, I was born in Romania. Let's say Romania, right? It's not the euro. It's different cultural context versus where I used to live, the UK, right? Never mind the fact that no longer in Europe, we'll not open that door. But there it's GBP, different ways of looking at the world, different payment systems, etc. But the fundament should still be the same, and that's, I think, where many financial services providers still find challenges.
Yeah,
it's in finding the right partner or even the right internal model to not have too much cost overhead. Because in the past, I've basically just seen, look, we use one provider in this country for mobile app, we use this other provider for a mobile app, and then we have to make it look the same as closely as we can. But then you're basically running two different code bases, two different teams, two different inputs and two different outputs. It becomes very, very challenging.
That actually leads into where I was going then, which is one of the questions I've got down here, which was, what advice would you give to leaders who want to champion innovation but are facing internal resistance? It kind of dovetails into that quite nicely.
Oof. It's there's no silver bullet. Unfortunately, I mean, ultimately, focusing on customer value and business value is the way to go. Because why do we do anything, right? As businesses and as people, I'm here at Plumery because I really want to help customers who are, our financial services providers customers. I want to help them excel in the market. I want to help them attract customers. I want to help them, take a 3.5 rating in the App Store to a 4.5 rating in the App Store. The very tangible things that we want to do for them. In the same way, if you're responsible for digital at a bank, mm-hmm. you're probably thinking the same way, right? And I think getting people on the inside to think in that same manner, it's not an overnight process.
Yeah.
It's education, and I think it's one of the responsibilities that, whether you're inside of the bank or outside of the bank, that we have to bring people into that world, so that they can also make more informed decisions at the end of the day. Because maybe it is too risky to go down path A versus path B, which path A maybe is way more innovative, whatever that's defined as. but in that instance, at least having an informed decision instead of just a hard no because that's the way that we've always done it. That's a better outcome for everyone.
Yeah, no, agreed. And actually, on that note, how are you finding the buy versus build? Because that must come up a lot.
Yeah,
for you guys, when you're you're in with the customer trying to pitch, etc. It's going to be normally it's almost the head of IT, CIO, that type of thing will say, "Well, I could build this."
Yeah, probably.
Right?
Yeah, probably.
And I know that from being former head of IT, I would have an ego in it, to be completely blunt, and say, well, why are we going here? If you give me several $1 million, I can hire more people and I can build it. And that's often, that still happens a lot when we have conversations with our customers is what's the best thing for them. And sometimes it is build and sometimes it's buy, but I'm curious to get your insight.
Well, this is back to the point about the types of customers that we serve and what success means for them. It fundamentally goes into that, right? So, let's say for a mid-sized bank or even a community bank or credit union that we're working with today, maybe they have a handful of people in IT. Build isn't going to be an option for them because they can't. So in that instance, we need to make sure that the fundamentals of our platform or whatever we provide for them, alongside any of the partners that we work with, are rock solid, because there's a certain expectation. But to your point, the CIO of a large bank, sure, I would say if you want to build, then please build. But I think there's a middle path or a third way, which don't build completely from scratch. That's essentially what we would say to that kind of head of IT or CIO. We would say, look, if you look at Plumery, we're SOC 2 compliant, we're all ISO compliant, we're PCI DSS, we've got all of this stuff that we've done that you wouldn't have to do necessarily. Okay, maybe you need to add some extra things on for your own internal risk controls, but the fundamentals are there. On top of that, basic security measures, business and banking logic. Again, don't build those things, buy those, and then build on top of that fundamental foundation. I think the discussion is on what's strategic. And for many, and we've made this conscious choice in terms of how we've built the platform around what we see most customers defining as strategic. So, is the notification mechanism strategic? No. So we provide that, just buy it. But on the same hand, is the user experience, the user interface, the reflection of the brand, the feeling that you get when you've paid somebody and I don't owe you $20 or €20 anymore for that meal, and I've just paid it off, and I've been able to do that easily without having to go through multiple screens. Like, that is something that we want to enable builders to do seamlessly and without friction and without having to be dependent on us. So I would say go build, but build on top of a foundation, and don't start from scratch, because maybe to put it into the business context, yes, maybe to build something like Plumery, it'll take you a minimum of 2 years, right? But you could buy it from us and you can have it within 2 months, let's say, right? I think that's a pretty good trade-off. And then on top of that, you can build all the value differentiation. Otherwise, you're going to spend a lot of time building stuff that's already been done with no differentiating value, and then you have to maintain it.
But I like the point you made there, I think, which is really it's that articulation. It's not just tech. You mentioned we've got the compliance angles covered with X, Y, and Z, PCI, DSS, whereas often the decision makers, because it's more than one decision maker, they have their own element that they're looking after. If it's just a pure tech thing and it's, well, I could build it, but that's additional cost, time, investment to get these things signed off, calculated, worked out, and often they're two different streams that meet let's be honest, at a much later point, and then you have to roll back things because you realise you've gone down. So yeah, that's really interesting. Well, that's been fantastic. Thank you, Cornell. What I'll do in wrapping up, it's been really interesting. Plenty to go away and think about. In the UK at the moment, I think in a lot of places around the world, exam results are starting to trickle through. With A levels in the UK or GCSEs and other areas. And some people have a great time. They go from the needed, others not so much. So they need to pivot, to use that word. But I'd suggest, or I'd ask the question from you as someone who pivoted, if you're just starting out on your journey and you think you want to be in banking or tech, where would you suggest would be worth a new entrant to this world on the beginning of their career start out?
Oh, my days.
Oh, it's easy, didn't you? The final ones is.
That's probably one of the hardest questions. No, it's tough because I would. So this is really odd, but I worked my way backwards. So I looked at kind of creating a North Star for myself. So this is how I worked, right? I when I was in my 20s, I went, when I'm 30, where do I roughly want to be? Like, and I'm not talking about, I need to have a car and a house, but, who am I? And try to let that sort of define my journey, my path.
Yeah.
So, I wanted to, be in a secure position. I wanted to really know my industry, family, maybe, who knows, right? Keep that open. And, because you don't really know too much when you're in your 20s. We think we do, but realistically, it's not the case.
Very true.
So I think that's first, right? Just have some kind of guiding principles about where you think you could be, write it down. And then when it actually comes to starting, I think, don't focus too much on, I need to be a lawyer or I need to be an XYZ. Think more on the kind of skill sets that you want to bring to the table. Like, what have you learned? What are you good at? And try and find companies that align with that and roles that align with that. Because it's everywhere at the end of the day. And I would say, learn AI, learn how to prompt, learn just, it's all on YouTube. You can ask the LLMs themselves, how to best use them. Like, get really good at that, because it might not be a required skill set in 10 years time, but it is now. And it's important. And to be fair, I think one thing I didn't appreciate when I was younger is just soft skills, because there are lots of people who can read a contract, code like machines, and whatever it is. But to be able to look somebody in the eye and deliver good news or bad news, and deal with that situation, I think that's still going to be one of the bigger challenges that we're not going to have completely fixed by AI, at least not in the short term. So I'd probably say, focus on soft skills as well.
That's fantastic. I think that in today's world where we're so hyper connected, but often feeling more disconnected than ever, I think to sit down I'll probably add to that with a pen and paper. And just write down, you say, North Star, it's not about the money or whatever. It's who do I want to be? Where do I want to be in those terms? And then, what skills? And I agree with you. I think soft skills is going to be massively prevalent. The ability to hold a conversation, eye-to-eye contact, that kind of thing. That was fantastic. So, Cornell, head of growth, was it head of growth at Plumery? I was about to say head of delivery. Head of growth at Plumery.
Head of growth,
It's been a really fantastic conversation. Thank you so much for joining. We will get this out to everyone. There's a usual thing that I say at the end, which is if you have any feedback, please email us at Banking Bytes, like, comment, share. I think you have to say that for the algorithm anyway. And we'd love feedback. And if there's any more questions you have for Cornell, please send them across and we'll reach out and we'll get them answered and share them back. So for now, thank you for watching Banking Bytes and listening to us on the podcast, and we'll see you on the next one.
Thank you very much. Thanks for having me.